Going into 2026, I've realized something very important. Most traders do not need a new strategy, they need a new set of rules. So in this video, I'm going to walk you through my 2026 rules for trading, not theory, not hype, but the rules that actually make my weeks profitable and calm. And if you're not a profitable trader yet, watching this from start to finish can genuinely change how you're going to approach trading in the next year. For anybody that's new here, I talk about all my trades prior from a macro and data perspective and a market structure perspective. I call out all my trades live, and then I recap them at the end of every week and do a dedicated trade breakdown for them. But with that being said, let's jump straight into my 2026 rule guide. And the first one is very, very simple. If I don't have a clear bias, I don't trade at all. Bias doesn't come from a candlestick pattern. It comes from macro headlines, economic data, and how the market is reacting to both of them. If the environment is mixed or unclear, there is no trying to figure it out. If there's no bias, there should be no trade in the first place. This rule alone removes a massive amount of losing trades. As you can see from my gold chart, we did have this very clean entry. We had a good break-even point very early on, and then a clean TP. This was a very, very clean trade, but this was only taken from having a good macro sentiment followed by data and backed up by the chart, giving me the right decisions to take this trade. Again, I'm not predicting the market. I'm letting the market tell me the story of which way I should be trading. Now, rule number 2 will surprise most people because I don't actually take swing trades every single week. Most months I have 1 or 2 swing trades total, and the rest of the time I'm not missing opportunities. I'm just waiting for alignment. If you do feel the need to trade constantly to make money, you're already fighting the market, and I would urge you to take a step back and understand what your goal is with your strategy. Me personally, the last time I took a trade on gold was all the way back December 12th when we took TP, and this trade was actually executed on November 25th. So that was almost half a month trade that was over half a month actually of a trade that we were in here. And after December 12th, when we exited this trade, the next trade that I took on gold was on January 8th. So a huge amount of time between. And I know that we did have the holidays. Obviously, we had New Year's and Christmas. Sometimes we do have trades that are close together, but sometimes we do have trades that take a lot of time in between. And I'm not upset with that. I'm letting the market line up and show me which way. We have had one loss on the board, which is a very avoidable loss from my perspective, actually. But you know what? I'm not upset about it. This is where I sit back and look at 5 other trades that I've taken that have absolutely slam take profits with minimal drawdown. And then looking at this one, it's kind of like just a little bit of a fart in the wind. For my third rule in 2026, charts are not where I spend most of my time. Charts are for confirmation. They are not for entertainment. I'm not flipping time frames all day or hunting for entries. Charts are just my confirmation tool. They are not a decision maker at all. By the time I'm done drawing my levels or thinking about an execution, the real work has already been done through macro and the data. And I urge all those traders out there that think they need to be glued to the charts every single day for hours at a time to turn your phone and your laptop off and take some much needed time away. There is no reason you need to be on the charts all day, every single day. The best traders I know are on the charts from 9 a.m. to noon, and that's about it. They're not looking at anything else unless they're getting alerted to a trade. As you can see, this took about 5 minutes this morning where I noticed that I could be interested in gold shorts from a macro headline perspective. Data is kind of fighting me on this one because CPI just did come in, and that does support long-term growth on gold. So the macro and the data are fighting itself. I'm not looking to at all force any trades, but I do see a good area of interest forming at this area right here, and I wouldn't be opposed to a break and retest if the macro and the data confirm that. Now, for the time being, all I've done is mark that out with one rectangle, and I've set an alert right here and drawn a simple line saying, you know what, that's what I would be interested. And that's about it. That took me about 5 minutes today, understanding that we're in no position right now from a data or macro headline perspective to go into gold shorts. The most I can do is draw a couple lines, set an alert, leave it as is. Now, if the data and sentiment changes also with the headlines, then this would make sense. But if the chart is showing me one thing and the data and the macro is showing me something else, I don't care to be looking at the charts. There's no need to be looking at the charts for a long period of time. Let the market do its thing. Let the market show me what's up and which way I want to be trading, and that's about it. Now, this next rule I do think most traders will struggle with, but you have to understand that waiting is a process. You're not doing nothing. Aside from the charts, you can check headlines once or twice a day. You can monitor upcoming economic releases. You can watch how markets react to certain levels, and you're just not predicting outcomes. I'm tracking a small list of stocks that I'm comfortable owning, and that helps me from an options perspective, like I've already spoken about many times. Aside from my swing trading, I love options trading, specifically in the form of selling cash secured puts and covered calls. When I'm not swing trading, it is the easiest thing to do. I set up my positions once a week. And for anybody new here, I set up those positions once a week. I call them out on Monday after I've been filled on them. And then Friday or Saturday over the weekend, I recap everything, what the goal was with them, and how they've actually finished the week off. And that's usually yielding me around 4 to 5% per month doing this. Way more consistent than most traders on a monthly basis. But if none of this changes, I don't trade at all. There's no such thing as a missed opportunity to me. That's what I just classify as discipline. There was some gold shorts that I did want to take off this area of interest right here. Unfortunately, I didn't get that break and retest, and the market just did dump. Now, I did have the macro and data perspective on this completely lined up. I had a great TP point. We had unmitigated lows all the way to the left here with some Asia session lows as well. From a market structure perspective, this area of interest right here where we had one touch, two touch, I really liked it already there. And we're showing that we're not putting in any more higher highs right here. We rejected off there, broke the area of interest. There was no retest, and we continued straight to my TP point. There's no such thing as a missed opportunity to me, and not being involved in this trade, I can be happy that my direction was correct. I can be happy that my bias was correct. The market will always be around for as long as we're living, or at least I hope, and there will always be more opportunities. There's no need to get butthurt and see this as a missed opportunity. Something didn't line up, and that allowed me not to take the trade, and that's what I need to classify this as. It's not a missed opportunity. It's just something was missing and I didn't get tapped in. The biggest thing for 2026 for me is actually going to be letting my options do most of the heavy lifting. Options are a core part of my trading aside from my swing trading. Cash secured puts and the covered calls, like I said, they just generate me such consistent returns. They reduce the emotional pressure of swing trading as well. And most of all, they don't require perfect timing at all. While most traders are stressed over entries, and my account is working very quietly in the background. And this is why I don't need to take constant swing trades either. When I'm doing 4% to 6% per month just by setting up a couple positions every single week and then having a huge gold trade like we did right here, this is just feeding this. Once my trades are done, I usually keep them in my live account, or I'm moving them over to my options account that I can do this with on a bigger scale, because this is way more consistent than this. One of the biggest mindset shifts for 2026 as well is a good week does not feel exciting. A good week means there was no forced trades, there was no chasing moves, and there's no emotional decisions. If my week feels calm, uneventful, I'm probably doing something right. If I'm closing a trade in that week, I'm probably not even trading for another 2 weeks, regardless of what's happening in the world, because stuff has to agree. The market structure, the macro, and the data all have to line up before I can even think about taking another trade. And this leads me into my next rule, which is risk management matters more than your P&L. In 2026, I want to be judging my weeks by whether I followed my rules, whether I avoided bad trades, and whether my risk stayed controlled and consistent. Some of my best weeks don't even look impressive on paper, but they protect capital and they're building the consistency overall. And the truth is, boredom is an edge in itself. And this is, again, the hardest rule for most traders. Profitable trading is very boring. There is a lot of waiting, there is a lot of doing nothing, and a lot of time letting probability do the work. If you're constantly looking for stimulation, the market will punish you. Patience is a skill, and it's one thing I'm doubling down on in 2026. Letting my swing trading play out as needed, selling my options once a week. All I'm doing is letting time have an advantage and following along with it. So in 2026, if you want to be trading better, this is the framework. 1, trade less. 2, wait for a bias. 3, if you're interested, let options do the heavy lifting work while your swing trading or day trading sits more as a sideline. Next, use your charts only for confirmation. And lastly, stop forcing excitement in trading. Consistency does not come from more trades, it comes from having better rules. If your trading feels stressful, chaotic, or exhausting, that's information. The market is telling you something about your process. In 2026, I'm trading less, I'm thinking more, and I'm letting the market come to me. And this is exactly how I plan to stay consistent all year. If you guys found value in this video, make sure to leave a like, subscribe, and leave a comment if you have any questions or just want to comment something about the video. And with that, we'll see you guys in the next one.